Welcome to Top Tier Outlook, everyone. Happy Sunday evening. Hope everyone's had a great weekend. A relaxing one after we saw the end of the month come and go, actually, without really any change to the overall plan for the year. I mean, the plan for the year is what? Prepare for what will likely be, again, tendencies and patterns. What will likely be a bullish 2024 with the elections. There's a bullish cycle when it comes to elections. We have a dovish pivot, which really, frankly, overshadows everything. And we certainly don't want to be bears when the Federal Reserve is preparing for rate cuts. And then I think probably take all that off the table for a moment and just look at what we have on this chart. It's the daily time frame of the S&P 500, the daily time frame of the NASDAQ, the daily time frame of the Dow. And these three, the major averages, which are really the most connected because of their shared sector weighting, their components, the individual stocks, the individual sectors. Yeah, the order might be different and there might be more tech here and more financials there and more energies wherever. But at the end of the day, they do tend to move together. And these are all in uptrends. So whatever it may be that, as I like to call it, the pig in the head might be whispering in the back of our mind, let's just trade what we see. And right now what we have are uptrends. So we will continue to focus on these. One of the things that we've been talking about in the mastery a lot is, boring and bull riding. I did Friday's video on bull riding. Is bull riding boring? Well, we want to make it boring, and it depends on the bull. So let's talk about that a little bit here. The point of looking for excitement in the market is not at all the point, right? And let's talk about what we have this year so far. There are a few stocks that have had just bananas moves. I think NVIDIA comes to mind. Now, look at this chart of GE, right? Just for a moment, just kind of get a good glimpse of it, a little snapshot in your mind, and then take a look at NVIDIA. Not terrible. I mean, it's kind of nicely organized. Pretty rapid ascent. It's a pretty rapid ascent. And then let's see, what's been also on a tear lately? Maybe coin. All of a sudden, everyone's interested in Bitcoin. BITO, everyone's all excited about this. SMCI, everyone's quite excited about this. And yet I will come back and say that if you're looking to grow an account, look, if you're looking for excitement, you want the stock du jour, whatever that move is right now, that's all that anyone can talk about, you might as well turn this off now. I'm going to absolutely waste your time. But if you're thinking to yourself, there's got to be a better way than hitching my wagon to horses that come out of nowhere, GE is the kind of stock that we want. I won't even knock NVIDIA. We want things that are climbing steadily up the stairs, not leaping, right? And the reason I say that is if I need to base my account growth on something that's suddenly moving higher, right? Just suddenly we're just seeing something wake up, BITO, COIN. Something that's going to have probably a once in a stock lifetime, right? This stock's lifetime move from 300 to 905. I need to trade these kinds of things. I'm in big trouble because these are not frequent occurrences. These are not going to happen 20, 30, 50 times a year. Maybe this is it for SMCI, right? Maybe this is it for COIN. And I know you might, anyone who's interested in these things, no, to the moon, right? I get it. But it really is going to be things like GE, relatively boring things like GE, boring things like American Express that are going to grow an account. And I think that's where I really wanted to start off the conversation and say, look, I don't care what's gapping up this morning. I don't care what's at a higher high this morning. What I care about is what are those really boring uptrends that consistently trade back into their volatility zones. And then within a few days, make maybe a slightly higher high. I pay myself, they pull back again, and we just do it all over again. And a lot of folks may mistake those parabolic moves and those big jumps higher for trading. But I'll tell you, good trading, the kind that doesn't make it too. I mean, look, I'm going to be 53. It's not too bad. I don't color my hair. That's not too bad. If you're not looking to go gray and get a lot of wrinkles, I would say find the American Express, the GEs of the world, right? So that's something I wanted to mention the first few minutes of the show. Now, when I look at something like, and you might say, okay, Rob, well, I'm not in those right now. What do I do? And by the way, there's a few other ones like that. Chevron's is starting. It's in the early stages. You might say, okay, Rob, how do we find the next GE? How do we find that next stock that could stair step? Sure, it's really easy to find it once it's moving higher. Sometimes it's better, when that nice stair stepping has already begun. That cycle of up, pull back, new high, pull back, that's begun. But where do they start? And they start sometimes as innocently as Chevron finally getting above a 200, with the XLE starting to show signs of bullishness, and crude oil also. This is a very early look at what could be one of those nice stair-stepping names. Now you might say, well, Rob, what's another example? Another example is back at the end of Q3 and going into Q4. So we're talking September, October. We started to add in financials. Now, no one was talking about financials in September. No one was talking about financials in October, really. But as we're going through October, as we're going through Q4, we decided if we can see financials get above the 200, which is kind of back in early November, late October, it's kind of like what XLE looks like right now, right? It's kind of what CVX, Chevron looks like right now. And once we get that, then the alignment starts to become more appealing to a broader group of traders. So where we are in XLE now is sort of where we were in XLF back in October, November, right? So if we can recognize those early signs and then continue to recognize the trend, organizing and climbing the daily price movement range, that's exactly what we're looking for. I don't want anyone to think that we're chasing things at the highs, right? That's not it at all. And it really saddens me when I see traders thinking they've got to trade. I haven't put a single trade on in coin or BITO. I don't plan to either, right? I don't need to. I don't need to find things making big moves and being parabolic to grow an account. And that's really what all of us are looking to do. Are we looking for home runs? No, we're looking for home runs because some people mistakenly think that you have to have 100%, 200%, 300% returns in a single name to grow an account. But what that ends up doing is you end up with kind of we call them the Dramamine P&L. It's up, it's down, it's up, it's down, and you need a Dramamine just to keep from getting seasick. So those are things that I want to, point out. Now, are there sectors that are absolutely poised for the probability of alignment? That's what I've been calling it a lot of. The probability of, or the alignment of probability. Probability of, okay, we can go either way with that, but it's alignment, right? So if the NASDAQ is moving higher, so that's NQ. Let's type it in. Right, Rog. NASDAQ to SMH to NVIDIA to Taiwan Semi. That's index sector stock alignment. That is the largest group, the index, affecting the smaller but still large group of sectors, and then the individual stocks within it. That is what we're looking for. That is the secret to the Sector Secrets Mastery. That is how all of my trades get put on. Those of you that are in Charts and Coffee with me, we talk about alignment. If you're in the Sector Secrets Mastery, index sector stock, that is just not negotiable, right? So what else other than tech? And well, we talked about communication, and there's two really interesting communication stocks, three actually. Meta is NASDAQ communications number one weighted stock, Meta. Netflix has been another one. If you're wondering, what is XLC, Rob? That's the communication sector. It's the number two weighted in the NASDAQ. So here's Netflix. And then the one that we're in the mastery is Disney. Disney's been great too. We've been in and out of Disney a couple of times. So we're going to continue to buy names that are strong, call them outperformers, call them best in breed, call them a ham sandwich. It doesn't matter. As long as the definition is the index is moving higher, the sector is moving higher, and these stocks are participating, in many ways carrying the load. And that's really what we want to look for, that kind of alignment. So if I head on over to financials, what's carrying the load? Berkshire, And this is where I say, please don't get the notion that, well, I'm going to pick a top and short it. If there is a path of least resistance, when the S&P is moving higher, when financials are moving higher, and JP Morgan, Bank of America, American Express is my favorite within it. When these are moving higher, just wait for the pullback. And remember that ultimately what picking a top in an uptrend is, and I try to keep this in mind too, it's a revenge trade. And the way that I know this is because if I were already long, right? I'm already long American Express. I'm long GE. I'm long a bunch of these things, right? That we're talking about here. When I'm long, the last thing I'm thinking about is where can I short it, right? Does everyone agree with me? Does everyone think about that for a moment? If you're already long in a dip, if you're already taking advantage of an uptrend, do you just wake up one morning and say, gosh, it's just gone too high. It's time for me to short it. Or when you've got skin in the game, when you've got long shares, long calls, some sort of bullish position, you just assume this thing go to the moon, right? So if you think about this and you're really honest with yourself, shorting into strength is a revenge trade, right? So if we can recognize the signs of this before it happens, we can recognize the signs of this before this happens, then hopefully we can not put the trade on because we recognize the fallacy in our thinking, right? And we just want to do something. So is GE in my longer term portfolio? No, it's in our swing trading. It's in our swing trading roster, Grace. So we're taking advantage of the daily time frame, sometimes the 1 hour, and buying the dip when it goes down into that daily price movement range. All right. Next, I have no wrinkles. Oh no, I think I do. I don't know. Maybe it's good lighting in here. I do. If I did some makeup, it probably wouldn't hurt. Oh yeah, they're there. Believe me. But it's how I know my trading's going well, right? If you're waking up with gray hairs and wrinkles, I'm telling you, it might be the trading. Get the boring kind. All right. Okay. Y'all are very kind. Y'all are very kind. All right. What about thoughts on ZS or BAC? All right. So Z-scaler is a different kind of animal. And I would say no on this one. But Robert, let's go back and ask ourselves, where is this one weighted? Is that sector in an uptrend? What's the weighting of that sector in the broader averages, right? So where's the alignment, right, of probability? So think about that. The other thing is, I love Bank of America. Yeah, no, we love Bank of America. Number three weighted in the XLF, right? And maybe love's too strong a word. It is in an uptrend, right? Maybe love is too strong. Is deep like okay? JP Morgan is better. American Express is better still. Citi is okay, right? See the two indicators at the bottom? The one that looks like two rows of colors, right? Little squares. Okay. We want as much green there as possible. As much green there as possible. We want to make all of this literally traffic light simple. The more green, the better. Green momentum, green trend. Wells Fargo, I believe, looks pretty darn good. Wells Fargo looks, and then Bank of America with less green is just a little bit less good. Bullish? Yes. As bullish as my beloved American Express? No. But yes, it's buyable. So is it valid for a dip buy? Yes, it is. Now, what about something parabolic like Costco? Sure. So let's take a look at this, Tommy. Do I look at Costco as being terribly parabolic? I don't. Now, in terms of being two times the price movement away, or just really levitating above the mean reversion, which are the lines here, the green, yellow, and red lines. In that regard, yes, this is an accelerated trend. But what I've found is a lot of trends over the past year or two have been really accelerated, and they're not giving us mean reversion. So for me, that pullback to that green, yellow, red area is a mean reversion. The move to the gray zone is a volatility retracement. And the difference between the two is the mean reversion is built on price. In this case, the open high and, the high, the close, and the low of the 34. So it's a price-based, a moving average-based mean reversion, which is what most traders tend to use for mean reversions. However, the yellow and the gray are calculated completely differently. The yellow and the gray aren't really about open, high, low, close primarily at all, right? Everything's going to look at current price to a certain degree, but where is it within that logic order? How heavily weighted is it within the indicator's logic, right? And in this case, pretty low. We need always price, but what's the reliance on price? In this case, the gold and the gray rely on price very little. Those are the actual ranges, not are we trading at 725, but how many points a day do we trade? So it's less about trading at 725 or 750, and it's more about what's the typical nature of Costco session to session. How many points does it tend to move? And then we plot that on the chart. And so I would look at Costco. I would agree it's probably parabolic, but luckily it doesn't matter because as long, and this is a nice, gorgeous, boring one, Tommy. Way to find a boring bull, right? It should have been boring bull riding when I did my video on Friday. It's a great, gorgeous, boring bull. Just bounce it along that gray zone. That's exactly what we're looking for. So even if it has gone parabolic, even if it's a little bit kind of hovering or extended above that wave, is it tradable? Yeah, I'm going to use the daily price movement ranges. I'm going to use the Darvis. Look at these nice yellow automated support lines. Beautiful, right? Beautiful. All right, cool. Thank you for the question. Next up is any thoughts on LMT? Well, again, I'm going to presume the daily time frame. So again, David, index sector stock. And my thoughts on LMT are really simple, David. And I'm glad you brought up a stock that isn't moving higher. It's really simple. In my mind, this is the way it goes. For me, it's really simple. What are the broader averages doing, David? Right? And everybody, ask yourself, yeah, Ragheeh, Dow's moving higher. What about looking at aerospace, right? Is that moving higher? What are stocks like LMT doing? Are they moving higher? So if I think about where LMT is within the indices, within the sectors, and then I think about other stocks that would move like it. Is it moving like them? If the overall broader averages have a nice rising tide, my thought is this: of all the things that I could do, I'm not looking for a laggard, right? Although, admittedly, at some point, the rising tide does seem to lift all boats to a certain degree. But I don't want to look for laggards. A case in point, let's just look at LMT for a moment and Apple. I'll tell you the same thing with Apple. We're still punching up to higher highs in the NAS and the S&P. Look at Apple. It's a dumpster fire. This is where a lot of traders think, well, this is a good deal. This is not. There's a difference between it's on sale and it's not getting the memo. LMT is not getting the memo. Tesla, not getting the memo, although it may be a little bit better than Apple. But let's stick with Apple, not getting the memo. So when I see stocks that are not rising with their groups, I realize I probably want to leave them alone. And that's probably as important a lesson as the stocks that I do want to trade, right? And so if what we trade is more important than how we trade it, and I do believe that's true, if it's an uptrend, momentum traders can be fine. Exhaustion traders like myself can be fine. Traders of all sorts can be fine in the context of a healthy trend, right? But what we trade is more important than how we trade it, meaning that a lot of times the errors or the lack of performance in our trading does not come down to whether or not we put on the best trade possible, but do we do the best thing for the best stock? Right? What's that saying with people? Sometimes we say, I did the right thing, but I did it for the wrong person. Sometimes that stings, right? We go, I did the right thing, but for the wrong people or for the wrong thing. We can do that in our trading too. I can put on a strategy as well as I'm capable of putting it on. But if I did it in a place that doesn't have a probability of follow through, it's not going to serve me, right? So I hope that makes sense. And so LMT would be sort of in that place. And Ray, I'll say Google's probably in that place too, right? Apple's definitely something I don't want to trade. Google's probably in that place too. Now, it doesn't mean I can't buy the daily price movement ranges, but when we see Google is part of the XLC, when I see XLC closing up, when I see the NASDAQ strong and closing up, when I see Meta strong and closing up, when I see Disney strong and closing up, and then I see Google, it was down on Friday. That's a disconnect. Please avoid those disconnects. That's what I'm saying. I think it's not that Google is not good. I'm just saying there's better, right? I'm not saying that it can't eventually align, but right now it's not. And then that simple fact that NASDAQ was up, Meta was up, the XLC was up, our Disney was up. I believe Netflix was up too. Yeah, that's what we want to trade. And you're going to find that the follow through, which is where we get, look, how do we grow accounts? Yeah, we got to get in, but it's not just about getting a fill. It's about follow through as well. The follow through is going to be better when we have that alignment. All right. So I hope that's starting to resonate, because that's exactly what we talk about all the time, right? Do we get that resonating of, hey, index sector stock is leading is leading the charge. So am I in the best index? Am I in the best sector? And am I in the best stock? Best in this case, meaning it has alignment and it's going higher. So I hope that makes sense. All right. So as always, gang, thank you so much for being here for the Top Tier Outlook, newsletter, which is going to deep dive this topic even more. We'll talk about the different, and again, if you're trading NVIDIA or not even NVIDIA, I think NVIDIA was fine in terms of a trend. I like SMH as a proxy for NVIDIA. So for those of you thinking, Rog, NVIDIA is a little spendy, what's another way to play NVIDIA? SMH. But if you're wondering, Rog, do I have to participate in this stuff? You really don't. I haven't put a single trade on here, and our accounts are growing just fine. I'm going to have the Countdown Trader. We'll have the February trades viz. So how do we do in the mastery? I don't mean a couple winners. I don't mean I'm going to show you my favorite 5 trades of the month. I'm going to show you what the account did. So we're going to have that available for y'all sometime this week. I got to sit down and cut the video, but that's what we're looking for, right? I'm not talking about greatest hits of my best trades from February. Who cares? Is the account up based on the trades we took in the mastery? That is it, right? Good, bad, and ugly. Do we have some losers? Oh gosh, yeah. The 2 most memorable ones, the most recent was Taiwan Semi, right? We got in. The journey to the target was untenable. We ended up with a paper cut. But this is what I tell my traders, even when we get stopped out sometimes, it's okay, number one, because we have other winners. But it means we have the discipline to say, look, do we trade it the right direction? Yes, we weren't trying to short this thing. And are we breaking any of our rules? Are we presenting disproportionate risk to our accounts? No. And those are things we have to ask ourselves. Not, am I trading the hot stock and where is it going to go? As if anyone knows, right? So when people ask, is this going to go higher? I don't know. I don't know, right? Nobody does. But what I can say is, where would I buy it from and what would my risk be? That is a trading question, right? Not, is such and such going to make a higher high, or where is the index going to be in 3 weeks? No, gang. Where can we buy this from and manage risk? That is a trading question. Anything else is just asking someone to guess on your behalf. Please, let's not do that, right? When you're in these talks with me, Top Tier Outlook, Charts and Coffee, let's think like traders do, right? Let's not think like TV watchers do, thinking that someone on television is going to tell you where the markets are going to be at the end of the year. All right, that's it, gang. That's it for our Sunday show. Thank you as always, and I will see you all tomorrow for Charts and Coffee.